Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 1st, 2025, and we're diving into Chevron's second quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Chevron's latest earnings report is packed with significant developments, including their recent acquisition of Hess Corporation and record production levels. I'm excited to break it all down.
Revenue and profitability overview. Let's start with the financials. Chevron reported earnings of $2.5 billion for Q2 2025, but their adjusted earnings were $3.1 billion. How does this compare to analyst expectations?
Chevron's adjusted earnings per share came in at $1.77, which beat the analyst forecast of $1.66. This indicates strong operational performance despite a challenging market environment, particularly with lower crude oil prices impacting the sector.
What factors contributed to this performance?
The key drivers were record production levels, especially in the Permian Basin, and strategic asset sales that offset some of the negative impacts from foreign currency effects and lower crude prices.
Operational efficiencies and strategic initiatives. Chevron has been focusing on operational efficiencies and strategic growth. Can you elaborate on their recent achievements?
Absolutely. Chevron achieved record production of 1 million barrels of oil equivalent per day in the Permian Basin. They also completed the acquisition of Hess Corporation, which adds high-quality assets to their portfolio, particularly in Guyana and the Gulf of America.
And what about their shareholder returns?
Chevron returned $5.5 billion to shareholders this quarter, marking 13 consecutive quarters of over $5 billion in returns. This includes dividends and share repurchases, highlighting their commitment to delivering value to shareholders.
Financial and business highlights. Let's talk about Chevron's cash flow and capital expenditures. How did they perform in these areas?
Chevron generated $8.6 billion in cash flow from operations, which is one of the highest in their history. Their capital expenditures were $3.7 billion, slightly lower than last year, reflecting strategic investments and cost management.
And their free cash flow.
Free cash flow was robust at $4.9 billion, supported by strong operational cash generation and disciplined capital spending. This positions Chevron well for future investments and shareholder returns.
Future outlook and strategic positioning. Looking ahead, what is Chevron's strategic outlook?
Chevron is well positioned for future growth, with a return on capital employed of 6.2% and a manageable debt ratio of 16.8%. They've also entered the U.S. lithium sector, acquiring significant acreage for direct lithium extraction, which aligns with their strategy to diversify and invest in cleaner energy solutions.
How does this impact their competitive positioning?
These strategic moves enhance Chevron's portfolio, making it one of the most diversified in the industry. Their focus on both traditional and renewable energy sources positions them strongly for the energy transition.
Key takeaways. In summary, Chevron has delivered a solid performance in Q2 2025 with strong earnings, record production, and strategic acquisitions. John, any final thoughts on their investment prospects?
Chevron's strategic initiatives and robust financial performance make it an attractive investment, especially for those looking for exposure to both traditional and renewable energy sectors. Their commitment to shareholder returns and operational excellence is commendable.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Chevron's performance in the comments below.